This candle trap thousands of traders every day, but I'm waiting for it every day. Whenever price is consolidating at an area and price creates a equal lows, okay, and then price breaks the previous high here and it goes to the upside. For example, in this case, price has two sides. So let's say the first side is broken, and now a lot of people think price has gained a change of character. Don't consider this week, just the first week. So what actually happens? Price break this high and creates a new higher high over here. Price will now tap this order block, like this order block, and it will now go to the upside. Okay, but what actually happens is when you try to buy here, price hits your stop loss and then goes to the downside. And this is how second week is created. And now what happens? Price breaks this previous low, and people think this is an inducement. For example, this because price has swept this liquidity, people think this is an inducement. For example, this is now our sell side order block, and we tend to forget that our actual trend is to the upside. Even though price has swept this liquidity, we are still on the uptrend, right? On higher time frame, if we use Fibonacci or premium discount pricing, we can see we are at a discount area here, right? So we need to look for buy side rather than sell side. And now the people who are selling from this area, price hit their stop loss and breaks to the upside. What we can do is we will wait for price to break this high, like price should sweep the liquidity of the high first and then the low first. So what we have to do is we have to wait for price to sweep the liquidity from the sell side like this, and price will break high of inducement, like in this case this one. So we know that price has swept this liquidity, and we can continue to the upside because price will generate more liquidity to the upside like this. In simple way, price have created this strong high, swept this weak liquidity, and created a strong low again here. So let's see on real charts. So in this case, we can see this is our point of interest. Price have created liquidity above this structure in the imbalance area and created this high, which swept this all highs and created a structure over here. So it's sweep the liquidity from the highs and then sweep the liquidity from the lows, tapped our point of interest, which is this one, and now broke this high again and created a new high over here. So we know that price swept the liquidity from the low, swept the liquidity from these equal lows, also from this low, tapped our point of interest, and now where is liquidity? It is because all the liquidity from these lows have been swept. Price have tapped this order block. So if all the liquidity has been swept from this low, so where is the liquidity now? It's to the other side. So this becomes our strong low, which is protected. And now we have this liquidity sweep from this area. We can mark this area. So we can enter on this order block, stop loss below this low, first high, second high. I have shared this chart on my premium channel. So if you want to learn SMC or if you want to join the group, the link is in the description, or you can message on the WhatsApp number, which I have given below. Also, let's see the second example. So this is our second example. We can see I actually marked 2 point of interest, this one and this one. Price directly broke both of those structures. I was waiting for price to give us a change of pattern, but actually price broke both of the structures. And now we have the third one. So I'll explain why I've marked the third point of interest. So here we can see these are the 4 lows, like equal lows over here, and price broke the previous high, which is this one, and created a small imbalance over here. We can see price this week and this week is not mitigated. There is an order block in the lower time frame. If we go to 30 minutes, we can see there is an order block on lower time frame. So this one, again, this also have swept the previous low. I will also make video on how I analyze the market and I draw the point of interest. So price created equal highs here, and this high swept out the liquidity from this equal highs. This high swept the liquidity from this equal highs and mitigated this area. Now this becomes liquidity. So this is mitigated. Now this becomes liquidity, and we have this unmitigated area, which is our order block. So there is trend line liquidity below this area, and now price taps our order block, give us a confirmation on lower time frame. So let's go to lower time frame. Price swept the liquidity, break the previous structure. Our entry was here, stop loss below there, and so I was explaining this. So you can see the pattern. Price sweep the liquidity from the high side if price is going to the upside, and then creates liquidity to the downside, mitigate some order block, and sweeps the low and sweeps the liquidity from the downside and then goes to the upside. So we have to wait for price to sweep the both side of liquidity block and react from our unmitigated order block, and that's where we can enter on the lower time frame by